Rising yields weighing on the tech trade today, with the sector having its worst week in some 2 months. Let's bring in star venture capitalist Rick Heitzmann of First Mark Capital here with us, as you see on set. How are you thinking about this space right now? Coming into the year, I felt like there was a lot of optimism. And today, has that waned at all or no?
Not at all. I think this is a short-term issue. In the long term, people are feeling really good about the year. They feel the new administration, especially with the FTC, is going to be much looser. We're seeing the M&A market really heat up. We've had a couple companies sold to larger public companies even so far this year, and it's the first week of January. And there's a huge M&A pipeline, either from large companies trying to acquire smaller companies in areas like vertical SaaS, or folks trying to play in the AI game.
When are we going to actually see? I ask every venture capitalist who comes on, just because there's been all this pent-up demand. When are we going to see more IPOs?
Probably
we have to wait longer than we thought?
I don't think so. I don't think so. We talked about earlier this year, hey, we got to get through the audit season. So this is always a dead time for IPOs because you have to get your audit done, update your numbers, and be ready to go out.
Okay.
So I think we're still 60 days away from seeing that machine turn on. A lot of companies filed confidentially, even some companies with great financial metrics, and even some AI pixie dust like CoreWeave. I think it's going to be a great company this year. Some of the companies like Stripe and Databricks might be second half of the year, but you're going to start seeing a pickup, as soon as March.
Let's talk about valuations, because it really is kind of an arc. I mean, you had a tremendous run-up in valuations of private companies, over the last handful of years.
Yep.
And then there was a big comeuppance. Yes. Obviously, as the Fed changed course, they had to raise rates, valuations really plummeted.
Yes.
Where are we now?
We're back to a normal stage, and we started to get normal about this time last year, where people realized that it was a myth. The valuations of 21 and 22 were not real, even the public markets or the private markets. And now we're saying, hey, what are companies really worth? And you're seeing more venture capitalists and more private market boards willing to take real market valuations. So you're seeing a lot of these M&A deals getting done, maybe at a premium to that, maybe at a discount to their 21 valuations. So people are willing to take a step down because they know it's a real market price. And I think of the IPOs that will go out this year, more than a handful will be done at a discount to the last private round.
Since we're talking about valuation, and you had the Anthropic,
Yes.
raise at $60 billion, how do you think about that? I mean, do you separate, if you think that valuations overall are more at a normal level? Are they normal for these AI companies, or are they starting to get to the point where you're like, I don't know that this is sustainable?
So there's valuations and there's AI valuations. AI valuations detached from reality about 2 years ago. And then within that AI, there's companies like Anthropic or OpenAI, which are completely separate, and that detached from the reality of even AI valuations. So you can't really look to them as market bellwethers or a comparable company of any type. You really have to look at what's the financial performance, really looking at operating metrics, really looking at how the company is performing. So when you see the headline of an Anthropic, a Databricks, any of these AI companies, you can't really look at them as a measure of the market.
No, but do you look at them and say bubble or anything of the like, even as they differentiate themselves, as you say, from traditional, even AI companies? Yeah. Do you look at it with any sort of pause, or no?
A lot of pause. Very concerning. And concerning because everybody else says if OpenAI is valued at this level or Anthropic's valued at this level, so should I. And that's really not relevant to 99.9% of companies. That's only relevant to the 2 or 3 really premium AI companies, and maybe not even relevant to them.
Okay.
So if
we're back to that game. We're back to that game.
Well, there's always a bubble somewhere. And so, these companies have detached from reality. They're momentum stocks. And now there are a couple more of the known companies where folks are piling in. Now the private markets have become more accessible to the retail investor. So you're seeing a little bit of a bump there as you're seeing increasing demand for those shares and being and very limited supply. So that's artificially increasing the price of those stocks.